So just the other day, a senator proposed a $600 relief or rebate check going back to the American people. And we need to talk about that because there's more things coming that are right down the pipeline that we need to address. Number one, what is the Federal Reserve going to do, and are they going to lower interest rates? The expectation is no, they will not. But this is a huge concern. This is something that President Trump wants to happen, and if it doesn't, then, just then, we may see a larger push from many lawmakers to get a relief check to the American people. But look at this. It says Senate introduces bill for tariff rebate checks after Trump's suggestion. It says Senator Josh Hawley on Monday introduced a bill to send tariff rebate checks to American families, similar to the stimulus checks during the pandemic. If enacted, the measure would provide a minimum of $600 per adult and dependent child, or $2,400 for a family of 4. Okay. President Trump said they are thinking about a little rebate. This would be it. Now, here's where things get very interesting. There is not going to be a rebate for the American people if we see interest rates drop substantially. If they drop a little bit, that's a potential inflationary event. So having interest rates drop in addition to seeing a $600 per person stimulus or rebate check, that would be two inflationary events at the same time. Some say that would be highly unlikely, or that would be stupid for Congress to do it. So that's not the first time they've done something out of stupidity, but again, that is where we're at. I want to show you something though, because a lot of people are saying we need more than $600. We just need more than $600. $600 won't pay my rent. $600 in many cases won't even make a car payment nowadays. And $600 for many will not put food on the table. But look at this. Okay? They say don't expect a rate cut from the Federal Reserve. That was just out of Bloomberg just this morning. Don't expect a rate cut. So if there's no rate cut, there's a higher chance of a stimulus check or rebate check coming to the American people, right? Right. But look at this. This is where things are starting to get interesting. This is from Bloomberg as well. It says even top earners are falling behind on credit card and car payments. The last thing that the American people need, or the U.S. economy needs, is for high-income earners to fall behind on credit card debt, medical bills, car payments, student loan debt, mortgages. If we see the high-income earners fall behind on a lot of their obligations and their debts, this is going to cripple the U.S. economy. And so some say if the high-income earners are struggling and are living paycheck to paycheck, that might be the ideal time to provide assistance and relief to Americans. Because not only do we need to provide relief to low-income households and middle-income families, but also high-income earners. Okay. This would also boost the profits for many companies as well. And I want to read a little bit of this to you. It says right here, the takeaways from Bloomberg. It says delinquencies on credit card and auto loan debts from upper-income Americans have jumped almost 20% over the last 2 years. It says Mark Zandi, he's the chief economist over at Moody's. He says financial stress is evident from the lowest income households to the highest income households due to high interest rates and pandemic era student loan forbearance programs ending. Keep in mind, a lot of the higher income earners do have some form of student loan debt. And being that the forbearance for those programs ended, they now have to pay it all back. That's a little bit of an issue. It says Juan Sanchez, he's an economist from the St. Louis Fed, says this makes the economy more vulnerable to other shocks as debt woes keep the outlook for spending in a precarious position. And it does. If we see so many people have just excessive amounts of debt and can't buy a new car or new home or can't invest, it creates a little bit of an issue. Let me show you this. It says U.S. delinquencies jump for upper income borrowers. Those making at least $150,000 annually see past due debts rise fastest. Now, One of the reasons why we're seeing high income earners are struggling with their debts isn't because they are living beyond their means or were living beyond their means and their income was not higher than their debts and their expenses. No. The reason why we're seeing more high income earners falling behind is because those people have since lost their jobs. That's why. The CEOs and the CFOs and the COOs and all the different executives and upper management are losing their jobs, which now puts them in a very precarious situation where how are they going to afford their lifestyle that they once had? Some people will scale back, others unfortunately won't. Look at this. You make over $150,000 a year, okay? Auto loan debt past due, this is a 2-year percent change, 18%. Credit card past due, credit card debt past due, 18.3%. Those that are under $45,000, that's only 8.1% or 2.5% for credit card debt past due. Yeah, that is concerning that it is up 18% for people making $150,000 or more. Now, where do we go from here? Well, here's the thing. Do we see, if more people are falling behind on their obligations, do we see Congress come out and pass a bill to provide more relief to the American people? Unfortunately, no. But it's a sign of what's coming. We know this, and we've seen it before. But the issue that we're facing now is we're not just seeing price increases just because it's the free market. We're seeing price increases because of tariffs and other things as well. And what we are hearing from the White House is the White House and President Trump in particular want to really help the American people. But by investing in U.S. goods, by buying and purchasing U.S. products manufactured here inside the United States, cars here inside the U.S. One of the reasons why President Trump put a provision in the bill, the One Big Beautiful Bill Act, to actually give you a tax deduction on your interest that you pay on U.S.-made cars. One of the reasons why President Trump is wanting to put together that 100% bonus depreciation for vehicles and other U.S. equipment, or business equipment, right? Makes sense. Invest in the United States. Buy here. Buy local. Do what we can here. So, do we think this new bill from Senator Josh Hawley is going to go through, and we're going to see $600 per person? It's very, very likely, but it's going to take time. And the issue that we're going to face, and again, I just want to be very upfront with you, the issue is that we are going to have problems. Once the problems, arise and they start to become a little more, difficult to deal with, and more Americans are struggling to pay off debt, or even just to pay it down, stay current on it, not actually pay it off. But if we are seeing more people are struggling just to stay afloat, put food on the table, keep the lights on, keep a roof over their head, and keep a car. If we see more people struggling to do those things, it will be more and more likely that a rebate check comes through. But if the American people are able to rebound and start making these payments on time, pay for their cars, pay for their homes, buy food, and it doesn't turn into an issue, which again would pretty much require the Federal Reserve to lower rates. If that's the case, then we don't see a rebate check coming anytime soon. So we'll see what happens, but I just want to share that with you because, again, it's not just the lower income and middle income households. It's also the high income earners that are struggling, and many living paycheck to paycheck.